Indian Housewife is the smartest fund manager in the world. This legendary one-liner was dropped by billionaire banker Uday Kotak recently. Why? Because gold just hit the big leagues. Retail gold prices have now crossed 1 lakh rupees per 10 grams in India. This milestone includes the 3% GST applicable on gold purchases in the spot market. On the MCX, gold futures too hit a record of 99,178 rupees per 10 grams. So what's fueling this gold rush? Let's quickly break it down. Weakening US dollar. Trade tensions between global giants like the US and China along with global tariff tensions. Fears of a US economic slowdown. Looming US debt crisis and massive central bank gold buying, especially from China and other global players. As per Tata Mutual Fund, rate cut expectations, inflation concerns, and central bank buying are pushing the gold prices up. And guess who's sitting on a fortune while sipping her chai? Yup, the Indian housewife. In fact, did you know that Indian women collectively own 24,000 tons of gold? That's 11% of world's total gold jewelry reserves. Now that's not just tradition, that's generational portfolio planning. And even billionaire banker Uday Kotak agrees with this. And here's where it gets more interesting. Finance guru Robert Kiyosaki, author of Rich Dad Poor Dad, says gold could hit $30,000 an ounce by 2035. Not only this, he also warns of a major US economic crisis that could lead to high debt, pension trouble and job losses in the US. And his advice? Buy gold, silver and Bitcoin before it's too late. Now gold's on fire, but how high could it really go? Over $3,700 per ounce if some of the world's biggest brokerages are right. Goldman Sachs has raised its forecast for gold. The new target? $3,700 per ounce by year end, up from $3,300. Why? Accelerating safe haven demand. UBS is equally bullish, predicting $3,500 per ounce, citing continued investor appetite in times of global uncertainty. Bank of America expects gold to average $3,063 but says it could climb up to $3,500 thanks to rising geopolitical risk premiums. Tata Mutual Funds notes something important. ETF inflows remain strong, signaling serious institutional interest in gold. That's not retail FOMO, that's smart money betting on long-term value. So what should you, the investor, do next? Tata Mutual Fund says the medium-term outlook remains strong thanks to sustained central bank purchases, global interest rate cuts expected, weakening US dollar and tariff along with geopolitical uncertainties. But here's your reality check. Gold has jumped over 25% in just 2025 and history says sharp rallies usually cool off and consolidate over 3 to 5 months. As per Naveen Mathur, Director Currencies and Commodities at Anand Rathi Wealth, one must stagger investments for now when it comes to gold. Let volatility work for you, not against you. That's your golden update for today. Stay with ET and keep shining.